안녕하세요. 미국주식으로 온 대학이 미준입니다. 오늘은 아주 특별한 방송을 준비했습니다. 인베스팅닷컴에서 헤드 오브 파이낸셜 컨텐츠를 맡고 있는 토마스를 모셨는데요. 자, 이렇게 굉장히 바쁘신 분이 미국준 채널에 방문해 주셨는데 어떤 이야기를 풀어 주실지 관심을 가지고 이번 방송도 끝까지 시청해 주시면 좋을 것 같습니다. 자, 그러면 토마스를 모셔보도록 하겠습니다. Hi, Thomas. Welcome to 미준.
Hi, it's a pleasure to be here and thanks for the invite.
Yeah, great to meet you. I understand you are head of financial contents at investing.com. Can you tell us a little bit more about yourself?
Yeah, for sure. Yes. I mean, I've just started on this position just a couple of months ago. I was actually the global lead of analysis for the company for the last 3 years. So basically, everything analysis related. And so, more in depth stock market analysis, commodities, or everything that's a little more in depth. That's not news exactly. I was leading it globally. So, as you know, investing.com, we have 15 major editions in many different languages. Basically, obviously, we're mostly based on English language. And then, we localize, we have local teams on set, for countries like Korea, Brazil, Italy, Germany, France, and, so all over the world. And it's really fun just to understand the different perspectives, try to combine everything, talk to the different analysts, see what people are looking about U.S. markets, about global markets, and it's just fun. I mean, I have a PhD studying, and I've been investing since 2013. Actually, I've
Yeah.
grown a big portfolio. Actually, nowadays I have north of $2 million in stocks
Mm.
that started just with $300,000. So it's been a
Wow.
nice journey. Yeah. Um, so basically, it's just a lot of fun to be here, to talk to everyone, to get the different perspectives, and eventually even transform that into real action in the market. So I just love what I do. Obviously, sometimes it's stressful. It's, as I said, lots of additions, lots of people all over the world. So it's kind of crazy, but it's super fun. It's to do what you like. I mean, and I know that you're kind of the same way. So I understand, and we share the same passion. So it's just great to be here.
Yeah, yes, it's true. We have a same common interest, but I have a very different background. You said you have a PhD in investing, but I'm kind of new in investing because I used to be a hotelier for
Oh,
22 years. So, thanks to the pandemic, I managed to get into this fascinating world, and the more I study and get involved, I found this so interesting and fascinated. And yeah, every day I have a lot of fun, and you learn a lot about the world and also companies and economics. And yeah, investing is one of the most fun things in the world, in my opinion.
exactly. Couldn't agree. I mean, it's you learn about the world. I'm second to what he said. I mean, it's all about learning about the world. It's not about just investing. It's not just about money. It's about actually how the world operates and how things work. That's what makes it fun.
Exactly. These days, especially, every day you have a different news in regards to AI. And I cannot imagine if I didn't invest in some companies related to I wouldn't be able to follow them because it's changing every day very quickly. I'm sure later on we might be able to have some chance to talk about stocks related to AI as well. But first of all, let's talk about market, US market particularly, because 2025 has been a very wild year for the markets. Can you give us a quick rundown of how the US market did up through May so far?
Yeah, for sure. I mean, quick is going to be difficult because, as you said, it's been a crazy year, one of the craziest years since I started investing. To be honest, I was investing through the pandemic, but in my opinion, this is even crazier because in the pandemic, it was like a major thing. It was something like bigger to the world, and now it's just the market is moving as if there was a pandemic, but without having that sort of issue, and so it's really difficult to understand and to gauge what's happening. So it's a very interesting year, but I would say that to me, it's one of the years most filled with opportunities that I've seen in the market since I started investing. I mean, I've never seen the market give me such an opportunity as it gave us the opportunity in April. I mean, the S&P 500 went all the way down below 5,000, and now it's almost up above 6,000. So we're talking about, a huge, almost a 20% increase in just, less than 2 months. For the index, I mean, I'm not talking even about individual stocks. Individual stocks, we got stuff, moving 50, 75, 100%. So it's a crazy year, but it's a year filled with opportunities. I mean, when you see, the market dropping, when you see volatility arising, that's when you should, start looking into the good stocks, start finding which stocks to invest. And that's where you're going to start building your capital. You're never going to build your capital if you keep just buying all-time highs. You need to spot opportunities. And this year has been a paradise for those who are able to do that. And again, we're just happy that on investing.com here at investing.com, we have the opportunity to offer, so many tools that can help you do it like the pros and find these stocks like the pros, because that's the most difficult thing to do, to be honest, is just to, go out there and find the right stocks. I mean, that's another level of game. Historically, retail investors have had, such a hard time finding good stocks. And, you see people push to buy, GameStops, all those crazy names that are, meme stocks, as they call them, that are not good fundamentally. And why is that? Because we don't have access, historically, we haven't had access to finding these stocks. I mean, mathematical models, all those things to understand the actual fundamentals of a stock, to predict, the long-term trajectory of the stock market. We never had access to that as retail investors. And so I think that, the way technology is shaping up, the way AI is shaping up, the way that we have access to technology right now, it empowers the retail investor to finally be able to find these stocks. So we don't have to be chasing these crazy names anymore. We can focus on finding the high quality names, the good names, which, will give you the returns in the long term. So this is a great moment for this. And my point being that I'm super happy. 2025 has been amazing, and I think it will keep being amazing, by the way.
Sure. I feel the same. I often talk to my audience that when it comes to the US stock market, any stock markets, when we talk about investment risk, actually that risk means volatility. And volatility has another phase, which is opportunity you talked about. So by investing in stocks, what we have is actually same thing, volatility as a risk and volatility as a chance, opportunity. And if you can handle this volatility in a wise way, you make a lot of money. But if you become emotional and then you eventually run away, you manage to lose a lot of money. So I think 2025 so far, it has been like a test to all the investors to some people had a chance, but some people actually suffered from the risk because they couldn't stand the volatility we just talked about. Actually, the reason we had this kind of volatility is from one person, Trump. So we need to talk about policy impact. Since Trump took White House over office, his tariffs have made the markets pretty volatile. And a U.S. court recently said that parts of his tariffs were illegal, but higher court let them stay in place for now. Even though the markets like the first ruling, Wall Street doesn't seem too worried about a tariff risk right now. What do you think Trump tariffs, the plans will look like from here? And how might they affect the overall stock market?
Yeah, to be honest, I mean, I think first of all, the first risk is not knowing what's going to happen in the future. So it's not even about, gauging what's going to happen with tariffs or what's going to happen without tariffs. It's just the sheer unpredictability of everything that's been happening. I mean, we don't know if tomorrow, Trump will just wake up and say, okay, now I'm putting 500% tariffs on China because I woke up, because I didn't like the way I looked in the morning. We don't know. We don't know. And that type of volatility is problematic. I mean, it's not the exact same type of volatility that we were talking about, the one that generates opportunity. And when we look at the macro, if this is something recurrent, if this is something that's long term, this is something that can, sort of hinder economic growth in the long term. And if it does hinder economic growth in the long term, then we're going to have to reassess, the way in which we expect companies to grow globally and especially in the US. So that's kind of problematic if it continues that way. However, I think markets do not believe Trump anymore. I mean, it's been so much back and forth just since the beginning of the year. I mean, there's even something that we've been calling in the US, which is the taco trade, which it stands for Trump always chickens out, TACO. That when Trump says something that he's going to impose 150% tariffs on China and the market drops, buy it because he's going to back off in a week from today and you're going to make money. So it's 2025 has been like that basically. But again, this is just something that happened. It's always easier to look to the past than to actually look to the future, right? So we don't know exactly what's going to happen. And this is a difficult topic, honestly, when we look at it, from an economic perspective, which is what really matters at the end of the day. But I do think that, Trump has already gave us signs that he doesn't want to, hinder global economic growth, that, he's not going to follow through with those types of tariffs that he imposed on Liberation Day, which was, which was followed by a market crash. So I don't think, I think the markets are past that. I don't think we expect that to happen again, anything like that. But we do expect some volatility. But that said, I believe that we're looking much better in terms of the global economic growth. I think, deals are going to be brokered, and maybe this could even turn out to be a good thing for the U.S. at the end of the day if Trump just backs out enough so that he can have, more U.S. products being sold in different markets in which, it's so much more difficult to compete, apart from the technology space. So I do think that overall, we do not expect, I mean, the market has already passed that. And so I don't think tariffs are going to be a huge problem for the market. I think now we're going to start looking a little more into interest rates, into, economic growth, into other factors that we kind of forgot about them just because everyone was just talking about tariffs, and those factors will come into play again. And the bond market is the most important market to watch right now, honestly, more important than the stock market.
You just talked about the bond market a little bit. Can you elaborate more in details? What do you think is the relationship between stock market and this bond market at the moment?
Yeah. Of course, the bond market is the bigger market. It's the most important market in the world, and obviously stocks can only do us so much if the bond market is supportive, right? If bonds start, first of all, giving an alternative, or if they start paying enough so that it's not worth to invest in the S&P 500 anymore, we're definitely going to see lots of investors worldwide actually going towards the bond market, just because that's stable, that's a guaranteed return. So it's not it's not like investing in stocks in which you can make money or you can lose money because you don't know the returns. When we talk about bond markets, that's a fixed income investment. And, if we get to a point in which, they're paying 6-7% on the dollar, for a longer period of time, there's no reason for us to invest in the S&P 500 because the S&P 500 is predicted to pay around 7-8% over the next 10 years. That's obviously depending, on different metrics that we have. But if you look at the Shiller PE, it's even a little lower right now. So when we look at those different metrics and we compare those against the bond market, I think we're getting close to a level in which bonds will start, being kind of challenging a little bit the stock market in terms of expected returns in the future. So I think people are going to start moving into bonds, and if we do that, that's problematic. Also, there's all the carry trade situations in which it's obviously if you're doing a carry trade, you're not going to take so many risks if you got the bond market doing so well. So I feel like we're almost getting to that situation. And obviously there's a bigger factor, which is, the mounting US debt, which, implies a higher risk on US bonds, which is the bigger topic of probably the century, I would say, for stock markets. But I don't think we're close to a blow up. I think this is something that's got to happen eventually. Who knows, maybe over the next 10 years, maybe over the next 20 years. And we know that the next financial crisis, the next global financial crisis is going to come from bond markets blowing up. It's definitely gonna happen sometime in the future. We don't know if 10, 20 years, 5 years, 2 years. It's gonna happen. It's a ticking time bomb. But the thing is, we don't expect it to happen now. We don't think we're at that stage, but we're obviously paying attention, and we're obviously precifying those risks. We're obviously understanding that, there's a higher risk right now because of what the bond market is signaling us.
Yeah. Hopefully the crisis will be like 20 years away.
Yeah, me too. I'm hoping for that.
You just mentioned during the Trump policy conversation that from now on, actually, as an investor, we need to pay more attention on fundamentals like inflation, economy, company earnings, and also you just mentioned the Fed interest rate. The Fed interest rate moves are a big deal right now. Do you think they will cut the rates in the second half of the year? And how do you think the market would react if they do that?
Yeah. So I do think we're gonna see at least one more rate cut this year. I mean, markets are a bit on the fence right now on that because obviously we've had a low spike in inflation, then followed by a downward movement in inflation. So obviously, when we talk about rates, the main thing that the Fed is looking is controlling inflation. So if inflation is really low, then the Fed gets more space to cut interest rates and then, get the economy moving, which is what we all hope. But again, if inflation keeps ticking upward, we may see, the market just pricing that a little lower, that probability. But right now we're on the fence on that. But I do believe that we're going to see the Fed cut rates again, just because the last inflation reading was pretty good. Again, if there's no issue on the tariff situation, because again, tariffs are obviously inflationary in nature, right? So if we do get lots of tariffs, particularly on big exporting countries like China, countries in which we get, lots of raw materials, lots of things that are, related to the broader economy, that are supportive to the broader economy, then we're bound to see inflation ticking upward. But if we do not get that, if we do get a deal between, the U.S. and China, a definite deal, then I think, inflation will be pretty much controlled. I think that, we're going to be looking at, and the next problem will be economic growth, actually, and then the Fed will have to address it in one way, which is by cutting rates a little bit. But to be honest about your question, just looking at the broader scope of things, if we're going to talk about 10, 20 years, I don't think we're going to see interest rates at zero again as we saw during the last decade. I think that period for the global economy is over. I think we have a different economy nowadays. I think we have an economy that's more fragmented. We have an economy that's less globalization. People are looking to trade, closer to the neighbors and rather than, more globally. So I think all those things, when we look at, also supply chains and all those things that are correlated to global trade, when we look at the perspective, I don't think that we're going to see interest rates hitting zero again, just because we're going to have sustained inflation in the world throughout the next decade. It's going to be at least 2.5 to 3%, in the world, which means that we're not able to bring interest rates down to zero again. So that implies that this is a different market. It's a market, in which rates are a little higher, in which bonds pay a little more. So maybe a little less returns from stock markets, a little more difficult returns from stock markets. But I think it's a market that forces us to find the good stocks. And it's at the end of the day, those things don't matter as much as finding the right companies, which is where the real growth is.
Yeah. So in summary, actually the investing environment is less favorable for the investors because we cannot expect the zero rate anymore. And also the globalization, which gave us a better chance to be more successful in terms of economy, is actually getting weak. Which means maybe it's better to invest in individual stocks rather than index then. Heading into back half of 2025, are there any sectors or stocks you think people should keep an eye on?
Yeah, definitely. First of all, I agree completely on what you said. I think it's, looking ahead, it's going to be a market in which finding the right stocks will be much more important than just, index investing, just putting your money in the index and waiting for it to return. I think we're gonna have to find the right stocks. And I think, there are many stocks out there. I mean, to be honest, even Nvidia, which is like an obvious name, but if you look at its latest earnings report, it's was just fantastic. It just shows that even the headwinds, between, China, the whole situation that's been going on, all the restrictions towards importing to China and everything that's correlated to that, that really didn't matter, a little. I mean, they kept investing, they kept allocating resources into the right side. So I think that's, still it's crazy to think that NVIDIA, even after all these years, it remains sort of fairly priced, after rallying 6,000% over the last couple of years. It's still underpriced according to how fast their earnings have been growing. So it's just crazy. It's just a great name. But then again, we have so many other smaller names. I think it's, again, as we talked about in terms of the indexes, I think it's not about sectors. Again, in the same way, obviously, we're going to have to, assess risks in terms of sectors. So basically, if we're talking about now, Trump has imposed a 50% tariff on steel, for example, over the last few days. So obviously, if you look at the countries exporting those materials, obviously then that's a headwind for steel companies that are caught between those tariffs. However, I don't think that means that we have particular sectors apart from that in which there are, particular sectors that are uninvestable. I think we have, differently from maybe from the past, in which you had just technology doing well and the rest of the market just trying to catch up. I think we're going to be looking at a more sustained perspective for across different sectors. So I think it will be more about individual companies than about sectors, and then about indexes again, as we said. So I think I quoted Nvidia, but I have a few other stocks that I've been investing on that I love. I think 3M was a great name. I think now the price is not as good anymore, but when I invested on 3M, it was about $90 a share. Now it's 150 almost, and we're talking about a stable stock that pays dividend. So my point being, what I'm trying to convey here is when you find those disparities, when you find those companies that are wrongly priced, those companies that should be worth much, much more when you look at their earnings, when you look at their growth potential, when you look at everything, and then you see a disparity, that's where you want to be hitting. And so this is the type of thing we want to be spotting right now. I think Autodesk is a nice stock that I invested on. I don't think I'm not sure if on the long term I'm still assessing that, but so as I said, it's cross sector. We've got lots of names, and I don't think it's about one sector. I don't think it's just about AI. I don't think it's just about industrials. I think it's about finding disparities. And by the way, in terms of AI, I would say that there are tons of companies that are still underpriced in the AI space, even though we've seen AI rally so much. But then again, there are tons of companies that are overpriced, right? So telling the two is where the real challenge lies right now.
Okay. I mean, I'm particularly interested in your last comments regarding AI stocks undervalued and overvalued. Would you be able to give us some examples?
Yeah, I wasn't expecting that question right now, so I would have to look a little deeper into that. But I can definitely circle back with with an answer for that. I mean, I have some names in my mind, but I don't want to be giving out any names or recommendations, if you will, without having the numbers in front of me, because this is a fast-moving market. But I can definitely tell you that Nvidia is in a pretty good position, even though it rallies so much. I'd be happy to buy it now. If you look at some of the bigger names, I mean, we've seen QCOM. I mean, that's still a great name. We've seen the latest earnings; they were fantastic. I mean, so we still have those disparities. We still have those companies that are growing at a huge pace, and I do believe that we can expect much more from the AI revolution.
Sure. In the beginning of our conversation, you mentioned the size of your portfolio is like 2 million, was it?
Yeah,
Yeah.
about that right now.
Yeah.
Yeah,
Yeah.
yeah.
Would you be able to tell us a little bit about your strategy? How do you invest? What is your length of investment, and how you choose? What is the criteria you adopt in order for you
Yeah,
to
for
choose
sure.
the stocks? Yeah.
I'm
Very quick.
actually opening up right now the portfolio just so I can give you some more insights on what I have right now, because obviously I've been growing. But I think, mainly if we talk about strategy, I mean, the main strategy is long-term investing. It's, value investing, deep value investing. We don't expect gains in a year from now. We expect gains to compound, and we expect gains to start to really, really compound, in about, 10 years from today, because that's when you make all your money. I mean, if you look at Warren Buffett, and this is a crazy statistic about Warren Buffett, by the way, you know that he made almost 90% of his money after turning 90. So basically, and why? Why is that? Because that's when the money starts compounding. Every decade, it compounds more. So compounding is the tool that you want to use. And basically, it's kind of the same thing. I started, I like value stocks. I like technology stocks. It's a good mixture. So I started with a few stocks, and then I started broadening out, to get more stocks and understand a little more, adding different sectors. And basically, I think about, just to name a few strategies that I use. First of all, obviously, always long-term investing and always conviction, right? Meaning that you're not going to invest into something that you don't have conviction in. What does that mean? It means that if the market starts moving south, or I mean, if the market starts dropping, you have conviction that that name is a good name, that name will keep selling, will keep bringing returns. And what does that mean? It means that, I feel comfortable to go out there and buy more of that stock if it's dropping, instead of, panicking and selling. Because the main reason why people panic is because you don't have enough trust in the stock that you bought. So you look at the stock and it drops to $50. I mean, you bought it for 100 and it drops to $50. Then all of a sudden you're looking at the stock and you're like, maybe I'll just sell this because this sucks. And you know what I mean? And that's stupid, because you're not gonna, I mean, pardon my French, but you're not gonna buy your house for, $300,000. And then if, the neighbor sells his house for $150, you're not gonna sell your house for $150 as well. You know what I mean? You know how much your house is worth.
Yeah.
Right. And it's the same thing with stocks. I mean, if you know the company you're buying, you have confidence in how much it is worth. And then you have enough confidence that if it drops, you buy more because it's trading at a discount now. So it's actually good that it drops. So this is the type of mentality that I, apply to the long term. And then you start understanding, you start weighing other things, which is macro risks, your understanding of the economy. I think it's very important for people to have their own vision of the economy and their own vision of what they believe that's going to happen in the world in the future. I mean, it's you got to believe, because the thing is, you got to believe in what you're doing. It can't be something that, you're following what someone else is doing, but you don't believe in it. Because then, as I said, if something happened, if volatility comes, and it will come, by the way, you're not going to have the confidence to hold that and to buy that drop. So it's all about having confidence. It's all about understanding, and it's all about making your portfolio represent your world vision. And when you build that, then you have all the confidence in the world for when the market drops. This is what I believe in. This is what I'm putting my money at. And then you can start building that up, and you can start, making it bigger. And then obviously you're going to look at, things as, you need to understand the fundamentals of the stock. You need to understand if the stock is growing or not, the revenues, the earnings, the sales, all those things. And then you need to have a good understanding of whether, what we call covariance, right? Which means that if we have too many stocks that move the same way, then probably, we're going to be too vulnerable at a market crash. Then we're going to start adding different stocks that are maybe from different sectors, stocks that usually go up when the market drops, and vice versa. And then you're going to have some technology stocks. And then you start building a portfolio that's a bit less, it's still not too, still a little bit concentrated, because we don't want to diversify too much, because then you're not going to make any money anyway. But, that's a little diversified, just enough to give you solidity to withstand, a market drop or stuff like that. And then you can start building on, and then you can start learning and looking for those good stocks. And when the market drops, and that's one of the things that I also do every time. When the market hits a new all-time high, I sell a little bit. I sell. Why I sell? Because it's the perfect time to get cash. And then you hold cash. And then when the market drops, like it did in April, then it's time for you to start using that cash, putting that cash to work. And then you start buying. So it's about that as well. I mean, it's, understanding the cycles, right? if we're at a cycle that the market is hitting all-time high after all-time high, means that risks are high and returns, future returns are not as good as expected, right? As you would want them to be, right? So then you start raising cash, and then when the market drops, you start buying. So it's lots of strategies, but it's about, at the end of the day, the one thing that can certainly guarantee that you're going to do well is knowing which stocks to buy. So I would apply all those strategies that I said, but also knowing which stocks to buy, which is, where I think are the tools that we have on hand right now, and investing.com can really, really help people, to really find those stocks. I mean, we have, ProPix AI, we have the stock screener, we have fair value, so many different ways to gauging those fundamentals, which really, really makes a difference.
You just mentioned some the parts of investing.com, inbeStingPro. So how can people use inbeStingPro to make a smarter decision then, especially when things feel uncertain? Can you introduce some tools we can utilize?
Yeah, for sure. So, I mean, first of all, we got to talk about ProPix AI, which is our biggest revolution. And I believe ProPix AI is part of maybe a bigger revolution in retail investing, which is something I mentioned earlier in this conversation. Basically, a few years ago, just having those same mathematical and fundamental models that professional investors have, like the Goldman Sachs's or the BlackRocks of the world, having access to those models would cost billions of dollars, at least millions and millions of dollars every year, because it's obviously it takes a lot of effort, it takes a lot of money, it takes a lot of understanding from the industry. But however, we do have an ongoing revolution in terms of the technology, which is AI, which allows us to get all these models that they use and compile them into a machine learning model, which will then compare those models, use those models one against each other, and then come up with the right stock. So this is basically what ProPix AI does, which I would say is the first way to find high quality stocks. Is it gets companies from around the world. It has companies in Korea, it has companies in the US, it has companies everywhere, and it just looks at the pool of companies, and then it runs all of these investment grade models that are used by the funds. We're talking about more than 150 models. And then it compares them against other models, and it compiles that data again over and over and over again, which is what AI does by itself, by its nature, right? And then it comes up with the best stocks. And which is great about that is that, then you have a narrowed down list of, we're talking about 30, 40 stocks, in which you can then take a look and then make your own assessment, like as I said before. So instead of looking at, every stock in the market, which is something crazy, which is something impossible to do for a retail investor, maybe it's at the reach of a bank, at the reach of someone of that size, but not of me. From my house, from my living room, I don't have access to that. I didn't have access to that, at least. And it would be impossible to look at all these stocks and then come up with an actual assessment. But what I can do nowadays is just get a narrow down list of 30 to 40 stocks and see, okay, these names are looking really good for the month according to a combination of so many models.
Mhm.
And then I will make my own assessment. I would say, okay, so my portfolio, I think I need a little more stability. I think I need a little more tech because I think I'm moving too slow against the market. And then you can start narrowing down, and you can start, using actually even our other tools if you don't know how to do, the stock, the actual stock analysis, or even if you do know how to use them. I mean, they can be shortcuts for you, like to do what you want to do in terms of stock analysis, but instead of spending a few hours, just spending a few minutes, and then you can actually narrow down and get to that right buy. So I think I would start by ProPix AI, but then you can use Warren AI, which is also a new tool that we have, which is a Gen AI bot. So basically, you can ask about any stock in the market. Say you get that list of stocks and you find a stock interesting, then you can throw at Warren AI and say, okay, can you analyze this stock for me and say, the bear and bull comments about this stock, and you give me those in a nutshell, and then it will give you, just the bullet points, and you can look at those things, just one by one, and it's super easy to make an assessment. And then you can, even go into Investing Pro at the stock page, and then go a little more in depth if you know how to do that. and make, a sound decision. And again, as I said, the main thing is when you go through all these steps, you know that you have trust on the decision that you have made. That's the coolest thing is if the market goes down, because, okay, but I know that this stock is growing its sales. I know that this stock, has a plan to do this. I know that, this company has, EPS of X. I know that the sector is doing X. And then you have enough confidence, to instead of selling the stock when it's dropping, buying more, which is when you make the real money. I mean, you can't expect that the moment you buy a stock is the right moment. Actually entering a trade means that you're going to start buying and you're going to keep buying that stock for an extended period until you reach a point in which you can wait now for it to grow. So I think, having the confidence to do that with all these models is what, gives you the confidence and the returns at the end of the day.
Right. Yeah, thank you for the advice and explanation. I'm particularly interested in Warren AI. You just mentioned that if you ask some questions and analysis, the Warren AI will give you detailed information. How is it different between Warren AI comparing to when I ask same question to ChatGPT or Gemini? Is there any specific functions I can utilize?
Yeah, definitely. It's completely different. And the main reason for that is because Warren AI uses our own data from InvestingPro, which is not accessible to everyone. So, and it's real time. Basically, if you ask ChatGPT, you will not have real time data on stocks or any other like Claude or all the other alternatives. They do not have real time data on stocks, first of all. So you're going to get a question that's late. And then we're talking about stock markets. Obviously, current data is this number one priority. And secondly, it has the entire library of data that which investing.com licenses. And we're talking about, this is something most people don't know, but investing.com actually licenses more than almost $3 million in data every year. So we're talking about a pool of data that's just huge, 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 and that's not accessible to everyone. It's maybe the banks have that data. Obviously, they do. Maybe Bloomberg has that type of data. But as a retail investor, you don't get that data elsewhere by the same price point. So what Warren AI is able to do is able to find and come up with an answer, accessing that data that's from right now that's so in depth that has all those different granularities, has all those different shapes and forms, if you will, and then it also has all the models from investing.com as well. So when you ask for an AI, we'll also use our proprietary fair value model. We'll also use our proprietary stock screener. We'll also use ProPix AI, which is our AI model, and we'll use everything else with real-time data. So I think that's the main advantage, which is something that you can't find anywhere else in the market.
Finally, do you have any last words or encouragement you would like to share with our audience?
For sure. I think this is an exciting moment to be a stock market investor. I started by saying that, and I'm going to finish by saying the same thing. I think there's it's a more difficult time to invest in the market, but I think it's a cool time because honestly, I think differently from the past. I mean, when interest rates were zero, when the market was much less sophisticated, people would go out there and hear from the neighbor that, my neighbor bought, X stock and I bought X stock and I'm making money. So that was a different world, but that world is gone. I think, we're in the midst of a revolution right now, and AI is going to be, the central part of this revolution because it will make everyone more sophisticated. So retail investors are going to get more sophisticated, whether, you're using investing.com's model or whether you're using, I don't think there are many models out there, but I'm sure that there will be. I'm sure that everyone will catch up on this. Everyone is going to be more sophisticated. Everyone is going to have access to the type of, financial models that only banks used to have. Everyone is going to have access to the type of information that banks used to have. So I think, at the end of the day, good stocks are going to be even better stocks and bad stocks are going to be even worse. So you will have to know what to invest on. I think, the days of just putting your money on what your neighbor says and expecting results, those days are gone forever. But that doesn't have to be a bad thing. That's actually a good thing. The market is becoming more efficient. The market is becoming more sophisticated. Retail investors are becoming more sophisticated, and taking advantage of this revolution and being in the right place in this revolution is what's going to drive the returns. And those returns can be even better than they were in the past because they're going to be real returns. They're not going to be inflated returns. They're not going to be, we're not going to be talking about stocks that, move 1,000% one day and then the next day they drop 90%, stuff like that. We're not going to be talking about that. We're going to be talking about real returns, returns that are driven by earnings, returns that are driven by sales, by recognizable brands. So I think the market is getting more sophisticated. Everyone's getting more sophisticated. So it's going to be more fun, but the results are going to be even better. So I believe we're in the midst of the revolution. And I think this is the right time to, armor yourself and just, get those tools that will help you succeed in this market. I think this is the exact moment for that.
Today is actually 4th of June, when we have recorded. This morning when I did my own filming for the channel, I mentioned that maybe as an investor, we really need to try to use AI more often because AI is working as a data collector. And the more AI advanced, people will encounter same kind of information more often than before. Because before the information was not evenly spread out, but now the AI is based on all the data available and it is likely to produce similar decision because data is there. So what you just mentioned is quite interesting for me. You said good stocks will become better stock and bad stocks will become worse stock. Maybe that will be true because we will judge each individual stocks or company based on all the information available, and maybe there will be so many different kinds of AI models, but eventually the results will be similar. So which means you use AI 1 and I use AI 2, but eventually the recommendation we receive should be based on fundamental, and we are likely to end up with investing in the same stocks.
Definitely, good stocks are good stocks. I mean, there's, that's not up for debate. I mean, we're talking about sales, we're talking about growth, we're talking about earnings, But then again, obviously it's always going to be granulated. I mean, there's going to be, better results, there's going to be worse results. And I think that's what makes it fun, right? So I think at the end of the day, it's all about everyone becoming more sophisticated and everyone knowing knowing how to differentiate good from bad, which is at the end of the day, which is something that's good for everything in the world. I mean, it's when you go to a restaurant, you want to be able to differentiate a good restaurant from a bad restaurant before you go, right? So it's the same thing with stocks. It's no different from anything else.
Yeah, thank you so much for the very interesting conversation. It's already 15 minutes past, but I feel like it's only 10 minutes conversation with you.
Oh gosh, yeah, that went by fast. I know.
Yeah. So I think I found the conversation so enjoyable and fun. Hopefully, there will be another opportunity for me to invite you back to my channel. Thank you for your time.
Thank you so much. Yeah, thank you so much for the invite. It's been, as you said, it's been super fun. So it was a pleasure, and I'll definitely be happy to be back.
Yeah, thank you, Thomas. And yeah, as you mentioned, the AI revolution is in the middle of our life, and I'm sure when I invite you back in a few months' time, maybe you will have so many updates and news with you.
Yeah, and I'll make sure to bring a good list of recommendations for you guys because I know you want that.
Yes, please. All right, then, thank you and see you soon.
Yeah, thank you. Bye-bye.